Well, hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and I'll be breaking down today's market price action. It's a Wednesday, May the 21st. Let's get into it. As always, we'll be taking a look at broader market analysis, take a look at what's happening in the currency baskets as far as the news front, and then we'll take a look at some possible setups ahead. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So jumping in the market analysis, let's just jump right into the headlines and numbers. And today was a bit of a sell-off day in the market. So we saw a sell-off today in the broader markets into the close. So we started off with a positive risk sentiment, and then we ended up with a negative risk sentiment. So one of the things that's driving or weighing down on the markets is the bond yields. Bond yields continue to strengthen. And we talk about how market can ignore it to the point where suddenly it will start to weigh down on the markets. And it looks like it started to do so. So I think in the next 24 to 48 hours, we want to see, the correlation between the bond markets, and then take a look at, well, how this is affecting the equities and the broader risk sentiment. Now, as far as the news front goes, we had the UK CPI, which was again higher than expected. So lately, we are seeing numbers, especially in the inflation front. We saw numbers from Canada yesterday. We saw some numbers from UK today. It seems like there's a little uptick happening in those inflation numbers. Now, let's just take a look at the percentage change. And again, if you take a look at it overall, this will not give you a perfect picture on what happened in the last 24 hours. A lot of the things were, you can see the smaller percentage change, but there was definitely more intraday activity, especially if you take a look at the dollar. Dollar took a nice tumble overnight and then reversed some of those losses there. So if you really compare dollar against CAD or dollar against the Aussie, again, we saw some gains overall, but if you can see, this is the market that's kind of lacks that consistency in that direction. So overall, I think this is, again, a great market to kind of trade on a day-to-day basis. But nothing too long term, because the trends are not moving aggressively one way or the other. Now, if we take a look at the broader markets, we had the S&P down, World Stock Index down. Like I said, this broader markets has been kicking higher. So the fact that they are now pulling back, we want to see if this is going to be a continuation or is this just a short-term pullback. Oil was down, and then we had the crypto market still looking pretty stable and strong. And the gold market continues to be volatile, now gaining again today close to 1%. So as we jump into our market outlook here, again, this is where we need to pay attention to the chart. So we are +2 on trend, but you can see that we are kind of rolling over from that pretty key 6,000 on the S&P as a resistance. So we got the rising 20 to 50 moving average. At this point, it could pull back down to that 5,700 to complete that pullback. Now, this is going to be important if you're trying to pay attention to the risk trends. Today we saw a bit of a pickup in volume as well. So we're going to watch and see what happened in the next 24 hours. Now, when we take a look at the schedule, we actually have some important key data coming from the UK, Euro, and the US, and that's their manufacturing and services PMI. Again, if this comes out worse than expected, expect some more risk-off sentiment. If it comes out better than expected, we'll probably see a positive effect. But that's really where we are getting some velocity off of these news events. So that will be, again, something to, again, pay attention to overnight, especially if you're trading euro crosses, you're trading pound, or if you're trading the dollar. Now, let's just go into velocity scores. As you can see that things are moving. Again, we have euro on the upper side. We got the Swiss franc and the CAD. And then we got the Kiwi and the Aussie more on the negative side. But again, if you look at the overall trend, things are kind of crisscrossing here. Canadian dollar was weaker a day before, it's strong today. It's kind of going back and forth. So that's where we're going to spend some time and look at some possible trades.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with the broader the currency baskets, and this is what I want to highlight, because I often get this question, where we are above the 20 to 50. Now I'm getting a +2 trend score on this one, but is it really a +2? And I think this is where you have to start adding in more layers to your analysis, because right here you can see that the moving averages are flat. So even though we are a +2, I would still call this a mild bullish. I wouldn't go fully bullish on this one. A lot of currencies I see are kind of the same boat. Here's we are with the Canadian dollar. You can see that yesterday I was getting if you look at it where we were, below the 2050, I have a -2. But then here we are getting a rally. So again, the price action or the trend is not that strong as you factor in overall where the moving averages are. And these 20 and 50 to moving average does a good job in showing you exactly what the price is doing. Here we are with the Kiwi, very similar story. Things are crisscrossing between the 20 to 50, not a strong trend. But on a day-to-day basis, you might get a positive reading or negative reading, but then, your job is just to make sure what the overall trend is, because based on that, you can kind of set some expectation. Is this something that I want to go pursue for multiple days, or is it something that's happening on a day-to-day basis? Here we are with the Aussie, kind of very similar story. You can see the prices are stuck between this 20 and the 50 moving average. Now, if I go into the pound, what am I getting? Well, pound is positive, but take a look at it. We're just kind of stalling right there. So this is, again, this is a much better strong trending score. But again, because the look at the candlesticks, they're not really aggressively moving. Now, if I go into euro, we just talked about euro. Let's go into Swiss franc. Well, same thing, Swiss franc. It was kind of stuck between 20 to 50. It just got above it. We are against that resistance right here. So again, this is where I'm getting a +2, but I want to see if this breaks out of this range. Now, if I go into the dollar, same thing. Dollar was kind of bullish over here. Now it's bearish. It's below the 20 and below the 50. But, if you take a look at the slope of these things, not so strong. So this is where I think you have to kind of use that trend score in conjunction with, what's happening overall. Here we are, another currency, the Japanese yen, is kind of stuck between that 20 and the 50. So as we go through this whole process, you realize that majority of things are kind of stuck between 20 and 50. Right away, again, this is what telling you that, it's hard to find the consistency, things that are running for the next, few days. Things are kind of more lasting for a couple of days and then it reverses. Just like over here, we got a base, couple of up days, and then we got a big down day. Here we are with the dollar, we got 3 candles down, trying to recover here. There's a lot of back and forth. Here's the Kiwi here. So the question really is that, okay, how do I trade this market? Well, first thing, if this is not really your cup of tea, the sideways price action, that's very, we can trade ranges, but when the prices are so stuck in that tight range, it kind of makes it difficult. So risk to reward is not really there. You're looking at 1-to-1 on a lot of things. So this is where, if you look for momentum, that's really where you want to trade for, is where the momentum is. Or you just stay out, put some alerts, see which way it breaks on the currency baskets, and then it gives you those directions. because now I can go through some currency setups where it'd be like, hey, I like this. But at the end of the day, it's not really making those new lows or new highs. They're kind of stuck in that range. And these are predictable range, like dollar CAD, stuck between 140 on the lower side, like 137.60. The same thing if you go into the other charts like Aussie dollar. Well, this is the resistance, this is support. So a lot of the things are kind of moving or drifting sideways or lower. So this is where you don't want to be using a lot of legging in strategy. This is not the right time to use legging in strategy because things are kind of going back and forth. Same thing here. You can see dollar Swiss franc. It did pull back a little bit, but overall, if you just take a look at the range, it's stuck between that range. So as I go through this, one of the things that I was going into this week was with, a bullish dollar outlook. And I was definitely wrong on that call here because things have kind of reversed. And I was looking for a rollover in the yen, and yen really hasn't rolled over yet. So, this is where do I continue, trading that markets, or do I, sit back? I mean, this is where I was looking in dollar yen in this week, and you can see that it clearly broke that 20-day moving average. So I don't really love anything as far as direction goes. If you find anything, realize that there either probably be either between those ranges. So this is, again, a good environment where, you're getting less breakouts and more back and forth. That's what you're getting. But for those kind of price actions, you got to know your entry and exits. But yeah, this is definitely a bit of a polar opposite of what we were seeing in the market just a month ago, where we had things happening all over the place. Things have definitely slowed down. And throughout the year, you'll see that the market go through different phases. And this is just one of those phases. Nothing lasts forever. You want to be there, keep the powder dry. For when things change, you can jump on and start making pips right away. So in conclusion, again, looking for currency in play. That's the only way to play here. We get this momentum, and that momentum, I mean, just like dollar last night, I saw a big push in dollar just one way. It doesn't matter where dollar crosses you look at, but it only lasted till, intraday today, and then it reversed. So this is really where you got to follow the momentum and get out when the momentum is over. If that's not your cup of tea, sit back, kind of wait for these markets to turn, because that's where the big opportunity is going to be. But most important is capital preservation. So trade less in these kind of environments and keep the powder dry. Thanks for joining here. See you the next one. Happy trading.